Hi friends, today we are going to discuss some important concepts in auditing. Let us start with the definition of an audit. What do you mean by audit? Audit is an independent examination of financial information of any entity that may be profit oriented or not, irrespective of its size or legal form, with a view to express an opinion on such financial statements. For better and clear understanding, let us divide this definition into three parts. First part, audit is an independent examination of financial information. Okay, and the second part, of any entity, financial information of any entity that may be profit oriented or non-profit oriented and irrespective of its size or legal form. Okay, whether it is a large entity, whether it is small entity, okay, whether it is company or partnership, it doesn't matter. Okay, and the third point, the object of an audit is to express an opinion on financial statements. Okay, the main object of an auditor is to express an opinion on the financial statements. Okay, we need to the main very important concept of an auditing is to express an opinion. Okay, opinion, there are different types of opinion. Okay, we'll discuss these opinion in SS 700 series. Okay, next, what is the use, why to conduct an audit? Okay, what is the use or purpose of conducting an audit? Okay, the purpose of an audit is to enhance the degree of confidence of intended users in the financial statements. Means whoever using these financial statements, we need to increase their confidence. Okay, like shareholders or public, means whoever wants to depend upon these financial statements, we need to increase their confidence. Okay, this can be achieved only by expression of an opinion by the auditor on whether the financial statements are prepared in all material respect in accordance with the applicable financial reporting framework. Okay, let us go into the detailed discussion of definition of an audit. First of all, we will start with independence of an auditor. What do you mean by independence? Independence is nothing but not depending upon any other person. Okay, independent. Okay, in auditor point of view, the judgment of an auditor is not subjected to the direction of any other person. Means he should not have any personal interest or financial interest in the entity or enterprise. There are two interlinked perspectives of independence of an auditor, that is independence of mind and independence in appearance. First of all, we discuss with independence of mind. Provision of opinion without being affected by influences. It means as an auditor, you should be very clear on your opinion on financial statements by the audit conducted by you without any influences by others. Okay, that is without any influences by the clients. Means you should be very clear, you should be free from bias. Okay, next one is independent in appearance. The third party would reasonably conclude an auditor's integrity, objectivity, and professional skepticism has not been compromised. Here, as an auditor, okay, when the third parties, whoever seeing you, when you go to a client office, whoever seeing you, you should appear in such a manner anybody, okay, should feel that this person will not compromise regarding his qualities, that is integrity, objectivity, and professional skepticism. Okay, that means you should be appear as independent. Okay, remember my friends, just being independent in mind is not sufficient for an auditor. Okay, independent in mind as well as independent in appearance, both should be there for an auditor. Okay, that is very very important. Next, we'll discuss about financial information. Okay, financial information, where will get this financial information? financial information contained in the form of financial statements. Okay, what do you mean by financial statements? Financial statements are nothing but a set of written documents, okay, which covers business activities and financial performance of an entity. Here, financial statements includes balance sheet, statement of P&L account, and statement of changes in equity, cash flow, and notes to accounts. Okay, now what do you mean balance sheet? This statement presents the financial position on a particular date, that is as on 31st March. Next one is statement of profit and loss account. This statement presents performance of an entity, that is either profit or loss during the period. Next one is statement of changes in equity. This prescribes the movement of owner's fund during the period. Okay. Next, cash flow statement. Flow of cash and cash equivalents during the period, that is regarding cash inflows and cash outflows, everything covers under this statement. Next one is notes to accounts. This includes significant accounting policies and other explanatory information regarding all the material aspects of the financial statements. Okay, this is regarding the financial statements and the financial information. Next one, who prepared these financial statements? Okay, remember my friends, entity is responsible. Okay, in entity, who is responsible for preparation of these financial statements? Management is responsible for preparation and presentation of these financial statements. Not only this, there are other responsibilities of management. Okay, that is establishment of good internal control. Means management should establish the good internal control in the entity, and maintenance of adequate accounting records. Management should maintain adequate accounting records and safeguarding the assets of the entity and compliance of laws and regulations. It means whatever the laws that are relating to the entity, everything should be complied with. Okay, who is responsible for this? Management. And selection and application of appropriate accounting policies, means whatever the appropriate accounting policies applicable to this entity should take care of by the management. Okay, and the final one, prevention and detection of fraud and errors. Okay, management should prevent and detection of fraud and errors during the preparation and presentation of financial statements. Okay, next, as we discussed before earlier, we should prepare these financial statements in all material respect as per applicable financial reporting framework. What do you mean by financial reporting framework? Financial reporting framework is nothing but it is a set of criteria used to determine measurement, recognition, presentation, and disclosure of all material items appearing in the financial statements. Okay, means whatever the material items that are appearing in the financial statement should be measured or recognized or present and disclosed as per financial reporting framework, that is FRF. Uh, Financial reporting framework includes accounting standards and as well as Ind AS also. Okay, and accounting literature and statutes, regulation, court decisions, and professional ethical obligations in relation to accounting matters. Whatever the statutes or regulations or court decisions given relation to accounting matter, everything comes under financial reporting framework. And published accounting interpretation of varying authority issued by standard setting professional or regulatory organizations like Schedule 3 of the Companies Act 2013, everything. Okay, issued by ICI. Okay, everything. Okay, uh, and general and industry practices widely recognized and prevalent. This all comes under financial reporting framework. Okay, until now we have discussed about audit, definition of an audit, and why to conduct an audit, and independence of an auditor, financial statements, and financial reporting framework. For if you have any doubts or any questions or any queries regarding today's topic, please mention in the comment. Okay, for more updates or and more about more topics on auditing, please subscribe to my channel and tap on the bell icon. Thank you.